My name is Nasser Sheikh and I'm a Chartered Certified Accountant with Hoffman & Cohen, a firm based in Knightsbridge, London. Our today's topic of discussion is the tax implication on dividends, which is effective since 6th of April 2016. We have been approached by a number of small limited company owners who wanted further clarification on how the tax on dividends would affect the limited company owners. We have therefore created this explainer slideshow which will explain on how the change would affect the limited company owners. Numbers could be overwhelming, which is why we have created a slideshow that will allow you to take your time in understanding the numbers. Before 6th of April 2016, there was no tax on dividend up until the basic tax rate threshold. This means that no tax was payable if you were taking £42,385 as mixture of dividends and salary before 6th of April 2016. The government has introduced a new legislation effective 6th of April 2016. The legislation states that only £5,000 in dividends are now tax-free. Any dividends over £5,000 will attract tax at 7.5% till the basic rate tax band is reached. Let's say that you run an owner-managed limited company with taxable profit of £60,000 before your salary. You were probably withdrawing £7,900 in salary. You were paying no tax and national insurance on your salary. You were also withdrawing £31,000 in dividends tax-free. In summary, you were taking home £38,900 in tax-free income. You were also leaving £10,680 in reserves of your company. Your technical net worth therefore stands at £49,580. Let's call this option lost. Let's call this option 1. You can still take £7,900 in salary without paying any tax and national insurance. You still have £3,100 left on your personal allowance. Therefore, £3,100 and a further £5,000 in your dividends will be tax-free. However, the rest of your £22,900 in dividends will attract tax at 7.5% or £1,718. Your take-home pay now is reduced to £37,182. Your company still has reserves of £10,680. Your technical net worth therefore stands at £47,862. You can choose to take £11,000 in salary. You will pay no taxes. You will pay £353 in national insurance. You can take £27,900 in dividends on which you will pay £1,718 in taxes. Your take-home pay will be £36,829. Your company will also save an extra £620 in corporation taxes. Your company will have reserves of £11,300. Your technical net worth therefore stands at £48,129. In summary, technical net worth with option lost was £49,580. Technical net worth with option 1 stands at £47,862 and technical net worth with option number 2 stands at £48,129. Let's call this option number 3. If you're running a family-owned business and your spouse and adult children are currently involved in the business, then you may want to consider transferring some shares to your spouse and adult children. Transfer of assets between spouses generally bear no capital gains tax consequences. Transferring shares to your children if over £11,100 would result in capital gains, which, if applied correctly, could be mitigated using gift holdover relief. Let's assume that you have your spouse and 2 adult children involved in the business who are now also the shareholder of the business. You pay them £11,000 each in salary, which makes a total of £44,000 including yourself. The total national insurance would be £1,412. Therefore, take-home pay in total would be £42,588. The reserves left in the company are £12,800, which would be taken as tax-free dividends amongst the family. Your technical net worth would stand at £55,388. You will need to ensure that the dividends that were allocated to your family does not get redirected towards yourself. This means that the structure should not be in place for your family to just transfer those dividends back to you. If it does, then HMRC may see this as your income or disguised remuneration. Disguised remuneration means that HMRC may see the dividends to the family as part of their remuneration on which PAYE and national insurance will be payable. It is not unusual for the head of the family to be responsible for the household costs such as mortgage, bills, etc. In your situation, you may then distribute that responsibility amongst the family members, which is again not unusual considering they are now earning more income. This will allow your family members to pitch in towards the running cost of the family. In return, you will get to keep more of your disposable income than before. Is it worth the hassle? Well, let's have a look at it. Technical net worth with option lost stands at £49,580. Technical net worth with option 1 stand at £47,862. Technical net worth with option 2 stand at £48,129. And technical net worth with the last option, option number 3, stand at £55,388. Gain of £7,259 in comparison to option number 2. It is not your choice to decide if £7,259 worth of gain is worth the hassle. The advice on the slideshow is generic in nature using the examples. Every situation is different and this advice may not apply to every situation. It is therefore important that you take advice from a professionally qualified accountant who will be able to advise you based on your exact circumstances. If you have any questions, then we can be contacted at info@dnfinance.com. You can also visit our website at www.dnfinance.com or give us a call at 0207 993 4061. We can also give you a no obligation online meeting and will be happy to advise as per your circumstances.